Welcome back, everybody. So this is it's an interesting day so far. Just looking at the larger time frames in GC and CL, it looks like CL is quite bearish today, and I'm going to show you why. Gold had a nice sell-off from this supply area at 24.48. Then for COMEX, we actually did a fake out value acceptance and ran right back up outside of the value, and now still staying around that supply. This is the first touch of this supply on the daily chart, but we're going to see if they can push it higher. I think we are, these are the all-time highs, aren't they? So I have the all-time high at 24.77.5. And I'm looking at the way they ran up this this price action. It is building momentum to the upside, so having some longs to fall back on. That wouldn't be a bad idea for today. Although, of course, you know, you're going to have things like short-term setups where the market participants might get some opportunity to do mispriced trades. So if we get a failed auction, you know, I might have a look at it. But for now, I'm not really interested in shorting this, even though we have the ADR high there. But somehow there's this whole, you know, I don't know, it smells like they're going to go for the all-time highs here at some point this week. So I'm going to focus on crude oil. Crude oil is rolling over from the daily Q high. We do have some weekly supplies around this area too, so this is all a reaction from that. And another reason why crude oil might be interesting is because we're already opening with the ADR low pretty much ignored. So we failed to get a meaningful bounce, and although we have a gap down, the fact that we already exhausted that ADR level is making me a little bit short biased. So I do have a short trade on already. Where did I go in? I went in from 80.63. So this is the Top Step Live that I'm focusing on recently. So yeah, I'm only using a 17 tick stop because I don't want to get smacked in the face in case this goes wrong and they start going into a gap fill. But from that larger time frame, this does make sense. I don't want to see it going to a failed auction, you know, to the upside, because then that will limit the profit potential. Right now we have a very, very small initial balance. Oh, the sound is distorted. Ah, yeah, I see. Hold on. Whoa, what happened there? Huh, for some reason my gain went completely nuts. That's weird. And I also seem to have lost my OBS. Oh, there it is. Okay. Is this better, guys? I don't know what happened there. My gain was like all the way up, smashing it into like 60 decibels gained. All right, let's continue. So I am short crude oil from 80, whatever I said, 80.62. And I would like to see a continuation to the downside as the jump away from those supplies to see whether we can get some nice momentum down. Like I said, IB size is super small. It's 41 ticks. And that can either mean a super boring day, or it can mean a potential for a trending day. And because we already had the higher volatility day during London, went all the way down, ignored ADR, we sort of are hanging around this decision point right now. So I want to see what happens there. But yeah, if you're trading gold, I would kind of consider a slower auction upside if you can get it. I certainly wouldn't be shorting this anymore, even though I had like a combine short from that idea that I took on the live stream from Top Step this morning. And that brought me up in that combine on Top Step X at 1.8k. It was just kind of testing a hypothesis. So that worked out really nicely. But now we have some other information coming in, and the shorts have not been able to push it further into value acceptance, even though that happened really early on. So yeah, if you're trading gold, consider the move all the way through to the average session range high, which is currently sitting at 24.59.6. And Komodo Dragon, yes, you might be right. I did have some puppies in here, so they were messing around, and it's very possible that one of them, because some of them are pretty tall, and my little RME controller was sort of hanging down because they were like playing around there and bumping into it. Yeah. Fur kids, eh? All right, where was I? Yeah, so crude oil, so far there's not much movement. It's very kind of barcodey. We are sticking in a range between 80.77 and 80.35. And we're trying to make a decision. So let's see who wins. If I look at the very low time frames and just like a generalized movement, we're kind of sitting below VWAP. We are trying to go below that 9 EMA as well. You know, I don't use those too much unless I'm trying to time the entry, but you know, it's a very simple directional indicator of how well the price is doing. I do want to put the standard deviation bands just to see exactly what we're working with. Just give me a minute while I adjust my Blahtech VWAP here. Okay. Okay, so we kind of migrated into the channel, into the second standard deviation. So this is still a dangerous trade, which is why I'm using 17 ticks only. Let me actually put what that looks like on the chart. So 80.63. So that's what my trade currently looks like, right? So 80.63 entry, stop loss at 80.80. Yeah, 80.80. But we're still not making a decision. So we need to wait until they decide which way they're going to take it. While we're still inside the initial balance, these sort of trades are always a pain because they take forever. So hopefully we'll find the direction soon. And if not, then I'm going to probably focus on something else later on in the day. Yeah, there's still some buyers here. And yeah, if we get that initial balance extension to the upside, I don't want it. I want to see a clean extension down. So this is kind of front running the trade idea that I have based on some other context and confluence on larger time frames. And you know, it's always kind of always like a coin flip because I don't really know which side is going to turn up. I think it has a pretty good chance to go down. And I might want to actually check some other stats here, just to get a bit of context on the day-to-day basis. I am using Edgefall here. You should be able to find the link to Edgefall down below. Some buyers are definitely stepping in. That's not great. Interesting. Yeah, and if this happens to smack me in the face for 170 bucks, then we're gonna sit and wait. There will be no trade attempts until we have more data. What am I looking at here? This is EST. Yeah, okay, edge full, thank you. So let's change that. I also want to go to green and red days by weekday. So Wednesday, sorry, it's Tuesday now, isn't it? So 57% red. So it's not the biggest, edge there. What happens when I go down to 3 months? Okay, so 60% red, a little bit better. So yeah, this would be, the short would be in line with that. But it looks like they might want to pop the initial balance high to the upside, which would kind of invalidate what I'm trying to do here. So, and you will have these kind of days, you know, you have a good hypothesis, but the day is very slow. You know, we have the summertime, and most of the days are just going to be quite painful. So yeah, let's give it, I mean, it's only 17 ticks, so I'm going to give it a chance to react. One thing I don't like about it is that 0.80 is actually yesterday's high. So what I might be looking at is that it touches 0.80 and then it turns around. So that would be extremely annoying, but it is what it is. So yeah, let's give it a chance. Bit of nicotine there. Slightly different vibe than Top Step TV. We're more relaxed over here. All right, so we've got Rita and we've got Komodo Dragon, Tony, Wes, Professor Nizami, Laughter, and Claudio. Laughter, we didn't really do any trading. Okay, so that's now done. Okay. It just went higher to pop the initial balance. So hands off, and I can tell you how London went. So yeah, London was great. It was a lot of fun. We had a lot of people joining in. Like I thought we're only going to have like, you know, maybe 200 people joining. And I think it was like 850, like it was a lot of people. And already now it's like, last time I looked at it, it was like 2.7K. So people are kind of going back to it to listen to it. So it was great. I am very appreciative to Gabe and Danielle. They stayed up to support me and to be there for me whilst I do my first show. So that was very exciting. I think they went to bed right after, but then I saw Danielle in the chat on Top Step TV, and I'm like, girl, when do you sleep? What's happening? So yeah. But yeah, it was really fun. Very good questions. It was. I'm really looking forward to it. We don't have DAX yet. I keep saying this. They're working on getting Eurex over, but you guys know that Eurex does the ticks in sort of euros, right? It's €5 per tick for the DAX Mini, and they can't do that. You know, we can't do that if you don't have some sort of a conversion that's going to track what the dashboard is doing in dollars. So until they sort that out, it's going to be a bit of a bottleneck before we can get the DAX going. It is going to happen. I just can't give you a timeline. It's a new platform, and we're trying to bring in the Eurex session into a platform that mainly does CME products. So that I don't know, apart from TradingView, whether anybody has done that so far. So again, it's going to be another innovation for the industry. I'm kind of looking forward to that now. So Should be pretty awesome when it does arrive. But in the meantime, a few people were kind of kicking around ideas. You know, I like to trade gold during London. I think you can like skim about 35 to 60 ticks during London quite nicely, especially in the latter part of the session. And somebody also suggested that we looked at YAM. YAM also moves like 140 ticks for London, so that's pretty cool. And the meme lord himself, Carl Hungus, he said that he trades copper, and I looked at that. That also moves about 140 ticks. But copper and gold, they're pretty similar. So yeah, we have some options. So it depends what looks correct on the day. But for the time being, London session is going to run from Monday to Thursday every day from 9:30 a.m. London time, which is 3:30 a.m. Chicago and 4:30 a.m. Eastern. So if you can catch that, awesome. If not, you can always watch a rerun, obviously, but I would like you to be there if you are over on this side of the world. Right, gold is sort of breaking out as expected. I don't like the kind of risk that I might need there, but what I might do is just pop in a micro gold just to be involved in that move. Oops, no, that's the wrong account. There's the problem with multiple accounts. By the time that I find the right one, we're going to be... Oh. And that didn't work. It rejected my order for some reason. See, this is the thing with live markets, guys. It's not, it's one thing trading on a sim, but every time you try and do something, and then for whatever reason, you just don't manage to get a fill. So it is what it is. So I won't be on the gold move. Oh well. Obviously, you never have the fills issues on the sim. Everything is super perfect. You click, you're in. Everything's peachy. And then you get to the live markets, and certain things just are not the same, obviously. It depends. So Rita has a good question. What is my stop loss for GC during London? It really depends on the range. Like right now, we probably have about 100 ticks range, maybe 150 on some days. So I will try to find opportunities where I can actually get in for about 15 ticks. So it's a pretty tight stop. Because London is much slower, and I will look at the ladder to see where the orders are, and I'm gonna, make use of something like the 1 minute chart to make sure that we are establishing some sort of a range, and then going in off the tops and bottoms of those ranges, rather than kind of just plowing in a 35 tick stop and then walking away. And obviously, when you're using tight stops, you can't always walk away unless the position has already gone in your favor. So yeah, there are definite drawbacks between trading London and having to use smaller stops. But on the flip side, you can use bigger size, right? So you saw that on that hypothesis combine that I was using, I ran a short, and I actually was able to get into a 5 full GC minis because the stop loss was so small. So I still ran it for a good, I think I took like 52 ticks out of it or something like that, and then I just walked away, had a little nap, and here we are again. But yeah, my stop losses for GC are pretty tight in London. And really anything that I trade, I try during London not to use super wide stops. On DAX, it depends on the type of a day we have, but I will use anywhere from about 20 even up to 35 ticks if I'm planning to carry it over into the overlap, because things do start moving a little bit more. And yeah, you have a that volatility increase that might put a wrench through the works. So it just depends on what sort of setup you're planning and how long you plan to keep it going. All right, let's have a little scan around some of the other markets, because I'm not really liking what I'm seeing here with all of these things. I mean, crude oil. We would be working with like a 41 tick range in the initial bounce for the failed auction. Again, not terrible, but not that ideal either. Left, I don't know. It's probably just sector rotation, I'm guessing. The strength in the Dow. These things happen ever so often. So yeah, if Dow is showing strength, then yeah, it's probably sector rotation, which happens around this time of the year. Let me see if I can find a chart of Dow. There it is. Yeah, so that's pretty strong. You know, YM is in its own sort of story. So it's always a bit tricky to try and correlate it to other instruments, because it literally has a mind of its own. And again, we had the smash through the average daily highs, and it's just kind of screaming higher, which always means some sort of an institutional activity. And this is also a potential for a P-shaped day, or even a true trending day where it just kind of keeps screaming. But yeah, this is institutions shifting money from one sector to the other. So yeah, that would be my guess. Anyway, you can try and look in depth elsewhere what's going on. But yeah, okay, so crude oil is going into a bit of a gap fill, which is against what I'm seeing on the larger time frames. So if I want to get involved in anything, I still want to be on that short side, because I don't want to chase it, especially not now that my first trade didn't do what I wanted it to do within the risk limits that I set out. And this is, to me, now not a great opportunity to chase, because the longer time frames are telling me that we are rejecting some swing extremes. And whenever we move away from those, it always gets a little bit more difficult to see what's going on. So I'm just going to let that percolate a little bit, marinate until we see whether we have some more movement upside, whether we have some single prints or not, and whether we maybe even just migrate back down and then get stuck in a horrendously tight range, which is very possible for this time of the year. Will S. says, it was great to see you on your very own Top Step TV show. You're amazing. Thank you for all your great work, teaching, solid process. Thank you so much. I really appreciate that. Hopefully that is what others will take from it as well. I have an idea to make that into, you know, partial trading, but also a class. And already whilst I was on, I got a lot of questions whether we can make it into a playlist, whether we can, you know, maybe dedicate a topic for each and every London session that we do, and then kind of make that into a little educational playlist on Top Step. And that's definitely possible. So I'm going to keep that in mind as we go further. I did actually show my little, if you were there, my prep template, which people have been asking for, but I just think that if you're not with the market stalkers method, which a lot of people are not over there, that you can take the idea behind the prep template like this and then make it your own. Because all the stuff that I look at, you know, it's not going to be the same things that other traders are looking at but it is definitely something that us, the market stalkers, look at. So you guys understand what do I mean by gap up, gap down, inside day, ASR, ADR, you know, all of that, time of day, things like that. So if you don't know those concepts, you'll be mightily confused. If you try and read that, it's like, what? ASR, what was that again? So I just didn't want to confuse people. So, you know, I might create like another template maybe just for Top Step TV. So I'll have a think about that. All right. What else can we look at? Let's have a look at RBOB, whether RBOB maybe looks a bit better. Oh, and another thing. So we're going to have the rollover. And this also could be the reason why crude oil might be a little bit weird. We are due to roll over tomorrow, but I don't think we rolled yet. Let me just check. This is why it's so good to just talk these things out, because even I sometimes forget what's going on. We want to go into quotes. Yeah, you see, so it's the same thing. We've now split volume between the two contracts. So we have 130K in the current August contract, and we have 110K already trading in September. That's always going to bring lack of movement, lack of follow through, or on the other side, huge jumps from whatever they're doing, but without any rhyme or reason, effectively. So the rollover is not the best time of the year. So I can expect by the end of this week that we are going to roll, maybe even like tomorrow. Precious metal, yeah. Will S. Yeah, absolutely. I've been pacing myself. Obviously, it's a very long day for me today, but I already had a little nap in the beginning. So after I came off stream, I just, did a bit of housework, and then I had a nap. So I'm now kind of a bit more fresh. I'm going to try and do the same before Mark's talking with D as well. Right, quick question. Is precious metals initial balance 8:30 to 9:30 a.m.? So I'm guessing that's Eastern? If it's Eastern, then yes, it starts 8:30 and ends 9:30. So that will be your initial balance. Gino, thank you. Thank you. Now for the London session, I'm probably gonna, some days you won't see me as put together, because Gino said, "Oh, somebody looks great." No, at least somebody looks great this morning. I'm somebody who can do my face pretty quickly, but on some days you might see me a little bit more disheveled than I normally am. Just depends on how much workload I have, how tired I am, and all that. But I'm going to try and look reasonably presentable, even though it is the morning and I'm a former night owl. So yeah. Right, RBOB also going into a bit of a gap fill there. Let's have a look at the ladder. Just trying to figure out whether RBOB might look better on large time frames. So let's have a look. Not really. It all looks a bit bearish from that side. Yes, there is a specific reason why it's that time, because that's when the open outcry pits used to start there. So there's a thing in the futures called the regular or active trading hours. What those reference are the old open outcry pits. So that's where those weird times are from. Even though nowadays the electronic trading goes before and past that, they still kept the majority of the volume during the former open outcry hours. So that's the reason why the cash session starts at one time, gold session starts at another time, and NYMEX session starts at yet another sort of third time, right? So it is all because before, the only way you could trade these products, you could go into a designated pit. So there was no, oh, I'm going to trade crude oil and gold now. No, you would have to go into the NYMEX pit, and then you had to go into the gold pit. So you had to physically get yourself over from one room to the other room. And sometimes it would even be a case of, you know, going to another city if the exchange was not in the same sort of area. So you have the London Metals Exchange as well. Now they trade a whole bunch of weird stuff, all in like 5-minute increments. So in order for you to trade the metals back in the old days, if you wanted to trade something like, you know, LME exchange copper, you physically had to be in London, in LME, and be a registered member there. So that's exactly the same thing that we used to have back in the day for CME. And yeah, the open outcry hours are the open outcry pits are no longer a thing, but the former hours are still a thing. So you can find the most volume there. You still also have settlement. If you look on Financial Juice, whenever gold and crude oil settle at their designated times, they will say crude oil settles at this price, and it's going to be 7:30 p.m. my time, which is 2:30 p.m. Eastern. Will the 70% still be available in August? No, that's just something that we're running for this week. So the discount on the website that we sent out for the newsletter guys, so that is only going to be available until the end of this week. And then we're going to see what we're going to do for August, but I doubt that the Funded Trader Blueprint will be on discount with that one, because usually we only have the Pro Dev on discount. But because I was running the Top Step TV session, we decided to run the discount on that as well. Laughter says, since using the X platform, the rollover contract is not really a problem. Trying to figure out the letters used in contracts. Letters used in contracts are really random. They to me, they never really made much sense. Like, there's no rhyme or reason there. So yeah, you just need to have a look at the CME website. So CME followed by the symbol that you're trading, and then you will see what the current month code is. And they are usually similar. Like, for example, I think when you have God, I always forget, but so CLN, I think, is maybe June or May or something. So they do have the same code for the month every year, but the code is just going to be different. And obviously the number at the end is also going to be different too. Yeah, and you know, Top Step X is great because it rolls contracts for you, so that's pretty cool. And yeah, so let me have a look at something to trade here, guys. So I'm gonna sniff around. Maybe look at platinum. All right, platinum. If we fail the auction, am I seeing that right? Yeah. So if we fail the auction around 1004. That could be a nice little short there too. Alternatively, if we go into value acceptance, I have about 40 ticks on the breakout until the average session range is exhausted. And the metals seem to be quite bullish today. Let's see how much cash that would be. That is quite appealing. Okay, I'm going to be looking at platinum as well. Let's hope we can get a fill, because I wanted to get filled on gold, and that train just just went. Do you know what? Let's try that. Let's try platinum. Front running a trade there. Okay, we got a good fill. Let's see if they can go into a value acceptance with this bullishness in gold as well. So my fill was at 1003.9. I'll show you that in a minute. Just need to change some of this. There's a bit of a danger that we turn around here as well, but I was looking at this today, and since the metals are, you know, they have a lot of demand at the moment, it might be an interesting idea. And then if they don't pop the initial balance high, where is my stop there? So I'm just looking at where the stop loss is. 1000.5. Okay, so it's actually a little bit wider than that. All right, so we're going up. Top specs, there we go. So now we're going to see if we can get the value area rotation going with the bullishness of gold. Pretty sure copper was pretty bullish earlier when I was looking at it, when Carl asked me about it on Topstep TV. I mean, if this rotates all the way, that would be like happy days, but somehow I'm always thinking that that's maybe some wishful thinking. But, you know, let's see what happens around the orientation point. So if I get, you know, if I get up to 1009, that would be nice. There is some larger time frame demand that I'm seeing here on the multi-time frame Blahtech SD indicator. Let me just jump through some larger time frames. Okay, so that looks good. Yeah, it's pretty bullish. So I'm sort of using a correlation, not necessarily the open of platinum, because it's not always just a product on its own. Very frequently it is driven by whatever gold is doing. So I kind of take the open sentiment from gold and try to match it up with whatever is going on here. So they tried to move away from the value, came back to it, and technically, even though like platinum, you know, it is opening on the nose of value low, so you can read that either as slight imbalance or being imbalanced depending on your system. But because gold is so bullish, I'm choosing to read that as a potential for an upside move. And we still have some statistical space before we hit those average ranges. I'm just going to check the settlement time on my VWAP, because I have the Blahtech VWAP that has a settlement time in there, but I'm just going to see. Yeah, so it is using the right time, because platinum also settles when gold settles, even though it's on the NYMEX exchange. It's a really odd pairing. And again, guys, it's the summertime, so, you know, if the momentum is not there, if I can't find any ways to limit risk and to go into a trade with about like 170 ticks maximum risk today on any single trade per any single contract, I will probably just sit it out. But yeah, so we're going to see how much platinum interest there is. I'm going to open that up in Bookmap as well, so I can see what the hell's going on. Even though when it comes to very thin products, I find that Bookmap is not that useful because it's like so slow. There's nothing you can see that's developing that you can't already see with your, like, just with your eyes. But yeah. I've got to say it's been a little bit more liquid than I first started trading it, because I started trading platinum probably back in March, I think. And it was so thin. It was like gaps everywhere. Now they seem to have populated it a little bit more. Like if I look at the ladder here, there's not a lot of gaps. Like, yeah, you have a spread of about a couple of ticks, but then it's like 2, 5, 10, 6. What the dome looked like back in March was gap, 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 nothing, nothing, nothing. And then like 5 contracts and nothing, 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 then 8 contracts. So I don't know, maybe my little cunning plan to get top step traders who are alive to trade a bit more of the platinum, maybe we're contributing to a little bit more liquidity there, which would be very nice. So JustFlow says I'm long DAX. Let me see what's happening in DAX, because DAX to me today was pretty dead. Alright, so it popped outside of the New York initial balance. Yeah, I mean, you've got some space there to do a gap fill up to 187. That is a gap fill, but for me that would be a small gap fill. It's only 38 ticks, so yeah. So to me that's a bit, the profit margin is not great. I always look for opportunities where I can grab like cleanly at least about 50, 60 ticks. And that way, if it starts to turn around, if it starts to mess around before we hit that level or the first opposing area, I can bail for about 35 ticks, 40 ticks. Whenever I try to get involved in a setup that has like that intrinsic profit margin, so the space, what is the intrinsic profit margin? It's the space before you hit a potential problem area that might cause a reversal, like VWAP or a value area edge or a whole bunch of other things. Like anything can be a high probability reversal. So I don't like to get involved in those sorts of setups. I want to have like a nice load of space so that I don't have to deal with, being sitting there watching it tick for tick because I'm running into an opposing area, then getting out, then getting back in. So yeah, so I always look for my profit margin to be available at a rate of about 2 to 3 R multiples of whatever I'm trying to do. Okay, let me say, Komodo Dragon. Does Russell move more? I like YM better than RTY, to be pretty honest. I haven't traded much Russell. I know that it moves, but somehow I don't gel with RTY. It's kind of the same story with ES, where I can trade it, but I prefer to trade it towards the end of the day rather than trading it in the middle of the session and at the open. So, yeah, RTY, yeah, it does move, but I prefer YM. So, yeah, if I'm gonna, pick between those two. Laughter says, can you show the chart on DAX? Yeah, of course I can. What's happening? Do we have someone? All right, so we have a friend who helps us around the house, Richard. So he's just turned up, so that's why the dogs are going crazy. They love him. Okay, so let's have a look at the 30-minute chart here. One thing you will notice about DAX is that it's super smooth, right? When you have the drops like this one here, it's beautiful. Like, you don't get whipsaws intra-candle that go for a million ticks either side. It's just a steady progression in one direction. DAX is one of the things that when I'm trading it on my live, on my personal account, I can really size up on it. And I posted a couple of things in my highlights where, you know, I was making anywhere from like 4.5 grand up to like 20 grand per trade in DAX without any drama. Like, there's no, you know, sometimes if it's going to be a range bound day, you might get a move that is a little whippy, but usually I'm pretty good at sifting those out. Like today, it's been a pretty quiet day, so I just stayed out of it. Like London was pretty dead. Look at it. It was just like barcoding all day. So I didn't trade it today. But yeah, it's very, it is an index as well. So just like ES is an index of 500 biggest companies, DAX is 40 biggest companies in Germany, right? So very smooth movement. Really pleasant to trade. I mean, I out of everything that we trade, DAX is probably the most rewarding. Is that fair to say? Even when you lose on it, like you can get out of a position really easily because you're like, okay, it's kind of not doing what I want. Like, it gives you a lot of time to decide what you want to be doing with it. Joanna says, D, can everybody see level 2 in Top Step? No, so you have to pay for it. I'm afraid it's not that much. It's $39 per month. And I believe it renews every first of the month. So if you're going to sign up, like let's say now, they're going to charge you now, and then they're going to charge you again on the 1st. Therefore, you would only get 2 weeks worth of data. But yeah, you have to sign up for level 2. You can go into your dashboard and then billing, and then you can go add level 2 data or something. It's somewhere in there. I always have it on. I have both Ninja, and I also have TopStep, and I have the data for both of those platforms. Level 2, I mean. If you don't use level 2 data much, then, I mean, you know, depends on what you trade, I guess. If you want to see those orders, that's great. But if you watch my YouTube video that I just did on Friday, the long form video, I did explain the basics of using Bookmap and stuff. And, you know, if you are not a super experienced trader with consistency already, Bookmap might just like scare you out of perfectly good positions, because you might see orders, you might misinterpret them, you might, you know, it's very difficult to use if you are not very certain about what the trade should do at a particular level. This platinum is giving me a little bit of palpitations with these little jumps here, but so far it's, you know, it's going my way. So let's keep it going. Ooh. All right. It's a nice pop to the upside. So it is following gold, and I would argue that it's actually following it a little bit better than, that it's actually doing a bit better than gold. So now we are above the initial balance. I mean, anything can happen in the next 30 minutes, of course, but for now, this is looking all right. So when I did that crude oil trade, it smacked me on the face for $170, and then I tried to do that MGC, which brought me down, and it just didn't fill. It just said order rejected. You can't do it. So I'll show you on the orders. There we go. Rejected. Max contract succeeded. My max contracts is currently set to 5 lots, like across the board. So I don't really know. I wasn't in anything else. So again, a little bit of weirdness there. But yeah, I'm going to reach out to the risk team later. So this pop in platinum for now is covering that little smack on the face, the bitch slap that we got from crude oil. And crude oil has been a little bitch recently, as we know. I've made that comment before, that joke just keeps giving. But yeah, let's see if we can get a nice push in these metals. I mean, we are coming in, like one of the reasons why I'm holding this, even though it could just end up whatever. So if I show you the daily chart, it sort of settled in a range. And if you look at where my entry was here, that's actually not too bad. Like looking at the overall strength of the position and its chart location. But because I had a smack in the face from our friend Crude Oil earlier, I might just try and, so let me just see where the ADR is. Okay, so ADR is up at 1013. Now, before ADR gets exhausted, I'm typically not that interested in the ASR level, because usually if you're in a major session for this particular product and it hasn't exhausted its own daily range, it's not a bad idea to wait for the ADR to get exhausted first. And then the way I use ASR to the other side would maybe be if you get a good retracement down, you can use it as a target to the opposite side, or maybe to even initiate the trade, because it will track it on both ends. So let's say that we do go all the way up there and then we start pulling back. So in effect, I'm using it as an opposite to the measured move. So it's like we went up, okay, whatever the measured move was, we went up, and then you're looking for a pullback. It's like, how much space do we actually have? Statistically, if something were to reach the top with the average daily session range, how much space do we have to the opposite side, if that makes sense? Yeah, Paulo, I actually agree with that I obviously have my own AMP account, which obviously is a high six-figure account, but no, actually it was a high six-figure account. I drew down a lot of cash there. So if you want level 2 data, AMP is so cheap. Like, it's one of the reasons why I maintain the MT5s still in MetaTrader 5 via AMP, because they probably have the best pricing. I think to get level 2, what is it, like $3 or something? Like, it's it's very ridiculous. So yeah, it's well worth it. But AMP do take a while. So I will say that when you're opening an account with them, I'm getting more and more people telling me that they take like a week. They're pretty picky with the people that they take on. I mean, my account, I don't know, it was years ago, but I think it only took like 3 days. However, recently I've been getting notifications from people who are opening it up and they're like waiting for like a week or two. So just beware that it might take a little bit of time before that account is open. But you can't beat it on the cheapness. It's like, it's awesome. It's like probably the most cost-effective level 2 data they can find in the entire industry. All right, so it's kind of being a little bit undecisive here. I'm looking for my top specs. Where is it? There it is. Okay. There are a little bit of orders at 1010. It's a nice level. So if they don't disappear, another thing that I look for in Bookmap, so when you've got a block of orders like this, as the price goes to it, are these blocks of orders turning blue and then disappearing in the sort of an assault of the other opposite side that is coming at them? So that's another little clue whether the level is going to be a turnaround or not. So if they start to bail, you can even see that on a regular ladder. It's just the Bookmap is like a cartoonish version of the ladder, and it just visualizes it a lot better. Whereas if you were to just stare at the DOM, it would be, something that you can see, like for example, they start bailing, you start seeing from 22, suddenly you go down to 20, 18, 15, and then they disappear. That's when you can expect a further run through those areas. I'm just gonna redo Bookmap because I think something went wrong. I got like an error. Bookmap is a little bit heavy on the old CPU and memory. So usually I have strong machines, but sometimes when I run it like overnight, it runs out of RAM memory, and I'm like, really? So it obviously fills the history too much. So sometimes I have to just go back into it. Little bit annoying, but hey ho. So we really need to see more push in the platinum. So we're seeing a bit of a divergence now between gold and platinum. Platinum is still kind of holding up, but I mean, it's such a thin market that it can easily just go back down. So far it's not happening. It's being pretty resilient. They've increased the number of contracts at 1010. Do you know what? I'm going to cover this and then I'm going to look for another opportunity because there's... Oh, and just as I said that, they stopped pushing. Yeah, but I'm still going to cover all of this and then put myself into a little bit of a positive. So, $70 covering that loss. Then we're going to see whether we get another pop at this at some point. But yeah, so now I need to like breathe, chill out, and see whether I can find a better opportunity so that that next opportunity is not a smack in the face, but actually a nice little trade that might bring me anywhere from about 40 to 50 ticks, which would put me on side for about $500, $600 on the day in that top step account. I'm just taking it very slowly, sort of like day by day. You guys know that we had platform issues in the beginning. We had crude oil dying. We had, I had a whole bunch of stuff happening, but it's turned around really nicely. So I'm just taking it very slow and building it up again. Just wanted to focus on trading small, trading sensible, just getting that process in place over anything else. And it's like I was begging them for a long time to remove all P&L in dollars. It's like, I want to see ticks. I don't want to see monetary values or anything. And they were like, oh, it's coming. And I think it took like 2 months before they actually implemented it. We were all crying for it. So our cries finally yielded results. Gold now waits for a correction and then activates. I don't know what it activates means. It's just going up in a trending move at the moment. There's nothing much more to read into it. I think people kind of start to read too much into it. If something's going up, it's just going up. Like we are sitting at average session range high. It's currently being ignored. We have 2 sets of single prints left behind on the profile. Or we will have maybe if we stay up here. We have one set of single prints. We have another 15 minutes before the next TPO is printed. That will tell you that there's a very strong market, that you should stick away from shorting it for now and use any pullbacks to get into longs, obviously, with it. Komodo Dragon, what the hell are you doing, man? Like, I would honestly look at doing some weightlifting before you trade, and, you know, try to be completely exhausted when you come to the trading session, because you're obviously unable to do self-control. You know, I can't help you there. So that's something that you have to practice deliberately. If you can't stop sizing up, if you can't stop over trading, that means that your self-control and your dopamine levels are completely out of whack. And then you're forever going to be in a spin cycle. Just, you know, 2 steps forward, 3 steps back. 2 steps forward, 3 steps back. You can't make money like that. I don't use Footprint. I use Bookmap. I don't like Footprint because it's like too granular for me. It's like, you know, looking at the orders and this and that. Like, I'm getting into sort of middle age now. You know, I'll be 44 this year, and I just can't, like, it's not very visually appealing to me either. I remember trying it back when it first came out, and I mean, it was useful, but it just wasn't for me. Like, at that time, I was only looking at the ladder because there was Footprint, there was ladder. This was probably like 2014. So it was very early on, and it was an invention of Market Delta, which was a platform that was pretty popular at that point. And then everybody kind of started dipping into it, but I kind of never gelled. And in fact, until Bookmap arrived, I preferred just the plain old ladder if I was going to look at what's going on and to see whether immediate order blocks are you know, building, or whether the orders are disappearing and stuff. I literally just used the regular ladder. Oh, Claudio, we've got another few months, so I'm a December baby, so 6th of December. Yeah, laughed. You age well. Yeah, a lot of people think that I'm much younger than I actually am, but I was born in 1980, guys. So I'm you know, I'm the last year of Gen X. That's what I am. So very old. This is why, you see, it's so funny because MP is only a year older than me. So when people are like, you know, oh yeah, you know, MP, you know, you're an old man. It's like, you know, some people are making fun of him. And I was like, hey, watch what you're saying, man. It's like, we're practically the same age. Like, what the hell? Like, are you calling us old? What? Yeah, September. Okay. Well, you should be down in London in September, right? So wherever I am, I can always come and meet you. Because it does look like we're going to get the house on the market around about that time. Paulo, ladder is a very simple tool. So all you're looking at is whether you can spot some larger orders. Actually, let's kind of have a look while I'm waiting around for the next setup. Because I'm happy that I took the ASR here as a level, because we kind of started around there, and, you know, better be safe than sorry, especially if I didn't have a buffer yet. So I'm going to take the buffer, and then we can talk about the ladder. Let's get a tops to pecs ladder, because they're quite pretty. And let me find, let's maybe go to ES. Okay, now ES has been having this thing algorithmically. I'm going to switch off the auto. Just thinking whether I can make this bigger somehow. Isn't there like a setting to increase the font size for those of us who are not old? Charts and data. No, I don't see it anywhere. I thought they did the whole font size, but I don't see it, so never mind. We're just going to have to deal with whatever we've got here. All right, so algorithmically something has been happening with the ES. You will see a very clean block of orders up and down. This is not humans, this is algorithms. This is very typical for summer trading. If I direct you to the price 57.12.25. Just below it, 3 ticks down, you keep having this block of orders that's 460, 339, 338. If you have top step X, follow along, or if you have level 2 data on any other platform, you can look at it. We can all look at it. This is the same centralized market that everybody's got. And obviously this is a live account. However, even the sim accounts still have the live feed, so you will be able to see those in the same way. And then if you look down at 57.05, you can see the same thing. We have 414, 366, and then they keep having that sandwich wedge of a sort of sandwich between the two brackets. Those are all algorithms. So for me, that's not that useful because they keep moving it up and down with the price. So therefore, I look for something that completely jumps out of that. Apart from that sandwich, we have 360 at 57.15. That would be a level of interest for me. So I would then go back to the chart to see whether I have anything obvious there. Or you can start with the chart, then go on the ladder. You know, it's the same process. That's how you would kind of match things up. And as the price is moving, now this is a little more difficult to see. If you have a block of orders like this, as the price nears the block of orders, are they still there? Are they disappearing? Or are they building even more? That should give you a pretty solid clue about what they want to do. Now, once we arrive into the block of orders, typically there will be a lot of them that do get filled. But here's the kicker. We don't know whether they're shorts that are initiating a new short or whether they're old orders bailing out of their longs. We can't know that because it's the same order, right? So because of that, you have to already know what you expect to see at that chunk of orders. Let's look at crude oil. Crude oil might be quite thin, much thinner than ES, but we might still be able to sift some bigger orders out. Crude oil ladder for me is this first one here. I'm going to switch off the auto so we can scroll. Okay, so here's a sticky outy 80-70 area with 62 contracts, right? That could be a draw of liquidity to the downside. And then to the upside, we have some immediate orders here at 55, which might support a further upside move if we can hold the level there. So if we keep filling longs at that level and the price keeps jumping away from it, you can then expect the same sort of behavior, those kind of blocks to keep being supportive. It's almost like somebody working on a staircase and then putting the staircase right under your feet as you're climbing up. That's how it usually looks. And then to the upside, if we're looking for targets, there are a couple of prices with some bigger orders at 81.59 and 81.60. Both of them have 62 and 64 units waiting to be filled, so that's a level of interest. And then nothing else. We have the high of the day. But yeah, that's about it. So really only about 2 points of contact for extremes of the range that we have. Komodo Dragon, I used to fund traders. I actually had, like at one point before COVID, we were pushing 16 funded traders. But the way we were doing that, it wasn't like the prop firms do. I would typically know the trader already, and then we would watch them trade in their own accounts through something like an investor password, day by day, and we would watch them for about a year before we would decide whether to put money behind them or not. Now, COVID changed all of that because we lost our office, so we had to basically cut everything down. So a lot of people were not sure what was going to happen, and then for a while, we didn't have any infrastructure for anybody, really. We didn't have any remote ways to kind of keep tabs on traders. Everything was set up in the office. So when we packed that up, the whole prop side of Blahtech was just getting really difficult. And it looked like I would have to spend a ridiculous amount of money to actually migrate all of my systems into some kind of a good, robust remote infrastructure. And for me at the time, with the uncertainty of COVID, with the fact that even the prop firm that I worked at was not really, like, they shut their doors for about a year, and they had some compliance issues. So everything was really uncertain for me. So I just shut everything down. And I just traded my own cash for a while. And then I started getting back into the whole remote prop firms because they started cropping up left, right, and center. So I don't think I will ever go back to that now that I've got the chronic illness. I've got TopStep TV. We've got a very good partnership going with them. I don't really see much point in me starting in a space that is already pretty saturated at this point. I don't think I would be bringing anything new. It would be just like another futures prop firm. And if I were to do something, I want to maybe partner up with somebody who does innovate, and that is absolutely TopStep. So this is the reason why I took on the role with them, and why I continue to work closely with them, and why I was a guinea pig for the TopStep X, the first live account ever. Jeremy, hello, good to see you, man. How are you doing today? I mean, we had a pretty good jump off a cliff in NQ. What did it do so far? Okay, so we're back to the value low. Shooting past it by a million ticks like NQ usually does. And still remaining inside the initial balance. That's just lovely, isn't it? Quite annoying. I don't know how you can trade that, man. You and Brian and Danica, I'm just like, But I think you guys are a bit younger than me, so fair enough. Maybe if I was still in my like 30s and my 20s, I would probably be well up for tackling NQ. Back in the day, that was crude oil. Crude oil was bloody crazy at one point. And what did I do? I was trading crude oil. So, yeah, if I was starting all over again, if I was 32 again, maybe I would also be a NASDAQ trader. You never know. I mean, I can certainly see the appeal of it. I just find it endlessly annoying. Yeah, so hopefully this little run through of the ladder was pretty helpful for you guys. I don't really see anything obvious here. Like, obviously I got that platinum trade, so that was nice. It did go a little bit higher, but we're still not at ADR. We might get there. Yeah, and this crude oil, I have this level here at 81.16. I want to match stuff up that I've got on the ladder for some potential levels of interest. But I mean, ideally, I now don't really want to get involved with crude oil until we reach ASR high at 81.70 and value low, which is currently 81.75. So that entire zone will become a good area for a short for me, with that larger time frame context. So I'm not chasing the gap fill because it's against what I can see on the daily chart, right? We roll over, we're moving away from daily Q high. We are moving away from the supply. This demand here is in the middle of nowhere, so I'm not expecting it to hold. If it does hold for tomorrow as well, then I'm going to have to reassess that idea. But for now, I want to short crude oil today. So we'll see. What else? Gold shooting upside. I was sort of involved in gold through platinum. I was like living vicariously through platinum, trading gold via platinum. But yeah, I might have a look at RBOB again, because I know that went into a gap fill as well, but we might be a little bit closer to the value lows there. Again, exactly carbon copy of what we saw in crude oil just a minute ago. So we have RBOB doing the gap fill. I want to see it at 2.4851, which is the average session range high, and 2.4865, which is the value area low. So if we can get there, that'll be a very nice area to do stuff. What? Somebody saying, at Rips, how did you get so good? Are you on the wrong stream, mate? Because I don't think I look like Rips, do I? Maybe today. Is Rips in here? I didn't see him. I thought he was still on fast markets. So he can't be in here. Do elaborate, dude. Are you calling me Rips or like what? Are you asking Rips a question via my stream? Do you want me to ask him that? I see. Okay, that dreaming of Rips there, are we? Interesting. Yeah, so yeah, how did I get so good? You know what? I don't think I'm the best trader. Okay, so how did I, like, I can understand from an outsider's point of view when I'm doing analysis, and I'm able to find very good setups with generally decent accuracy. But I really don't think that I'm anything special. You know, I just let the math work for me for the most part. I try not to overtrade. I try to hold a higher risk reward on my trades, and I try to wait for the levels that will give me that. That's really maybe the biggest strength that I have, just being able to sit on my bum for like hours on end waiting for the right setup to come along. And I get criticized for that on Top Step TV a lot. They're like, oh, come on, it's a fast markets. Come on, D, like, we need to trade more. It's like, look, I've got my style that's working for me. And every time I tried to change it around, it messed with the stats. And I wasn't happy. I like to do higher probability trades. I grab anywhere between 45 up to 120 ticks per trade, sometimes even more than that if we have those home runs. But again, they don't come very often. But yeah, how did I get so good? Let's just say that it was journaling every day, doing this for a very, very long time. Like, I've been trading all in, like before I became a professional prop trader, for 16 years. And then since 2013, I went into prop. That was day after day, writing down what I've seen, writing down the time of day when it happened, writing down the level around where it happened, where the event happened. And then slowly, as the years went on, I kept sort of adding little bits and pieces that kept improving that. And also improving myself. You know, I said at the beginning of the stream that I was a big grasshopper myself, which is why I understand when you guys are struggling with that. The way I battle my own tendencies to do stupid things in the market is by doing bodybuilding before I would even trade. So my entire morning was spending an hour and a half at the gym, lifting some heavy shit, and then coming to the trading station and trading desk. Without that, I would probably keep clicking buttons. You know, you allow that lizard brain to do whatever it's doing, and you allow it to take control. And it happened to me a few times. And when I was still working in office, every time I went on a bit of a rampage, they would be like, oh, it's not D trading, it's D animal. It's the animal side of D. It came out today. So yeah, I know, you know, I know the struggles that this industry brings, but at the same time, to me, I'm very stubborn. I'm somebody who doesn't want to let go of a new skill that intrigues me endlessly, and I want to get good at it. Everything that I took on in my life, I got to the top of the game. I don't do anything halfway. You know, I learned to play an instrument when I was a kid, had to be one of the top session musicians. I did gymnastics when I was 5, actually. Well, let's go all the way back. So I got into the Olympic gymnastics team by the time I was 9 years old. This was back in Yugoslavia. We still had a country. Unfortunately, by the time that I was supposed to be old enough in 1996 to take part in the Olympic Games, the country fell apart. We had the Civil War. The funding went to shit. And, you know, that dream died very quickly. And then I went into music, like, with my full heart. Like, you know, it was like an amazing journey. But then, you know, after about 15 years of that, I was like, you know what? The music industry is just weird, man. There's a lot of backstabbing, not a lot of reward. It's a lot of hard work. And a lot of travel. So when I got to my 30s, I started thinking that I needed to find something else to do. I was already trading. I was doing pretty well, but I was trading my own money. So once I got to make about, I think it was like $250,000 or something, it was a, not an insignificant number. I thought to myself, maybe I should do this for a living. Like I quite like it. I seem to be pretty okay with it. So yeah, let's try and be a prop trader. Now that was a humbling experience for a year. It took me probably about, all in, probably about good 9 months before I was getting the grips with the consistency. So it's like I was making money, but it was all a bit haphazard. It's like, oh, make, $4,000 today, lose another 3 tomorrow, make $7,000 today, lose another 10 tomorrow. So I've been in the same boat as you guys, and I just got annoyed with that. And I was like, I have to stop doing this, man. So I tightened up the daily loss limits that they had. In fact, that firm didn't even have the daily loss limit. Like they had the beginning, and then you kind of build up a buffer, and then they would just give you like a monthly loss limit. But I decided that I actually wanted a daily loss limit to stay. So I looked at my trading results, and I came up with something that I was comfortable with. But to be honest, in hindsight, I think even that was a little bit too big for the consistency. I just didn't have the consistency that I had today. And I worked extraordinarily hard to get there. Like my whole obsession with stats and with times of day and levels and how often they occur and all of that, that's all because I want to have a relatively smooth curve. Even when I lose, I never want that to make a huge dent in my P&L, something that I can't get out of for like a year, right? So that's what I'm trying to teach. That's what I'm trying to convey to you guys. Number of trades per day that you do versus risk reward that you get on average in your trades, as well as your accuracy plays massively into that. So those 3 components have to be a big part of your risk model. Then you're going to see some consistency. So it's not necessarily a consistency on a trade by trade basis. It's the consistency between how much you lose on the day versus how much you win on the day versus what actual risk reward you're aiming for. Because I usually aim for about 2R. So if I do 2 trades and they both lose, what do I have? I have minus 2R. What do I get if I continue to trade and lose the 3rd one, 4th one, 5th one, and just have a really bad day when I'm really not reading the market well? It means that if I lose minus 5R on the day, and my average win is about 2R, and let's say that I also have an average winning day as 2R, 2R multiples meaning, so whatever you risk, you get 2R. So if at the end of the day, that's what you end up with on average, so that's on average. If you're constantly putting yourself into holes that are deeper than your average P&L when you're winning, that's going to be very hard living. It's going to be like nightmare. Because you're always going to be in some sort of a drawdown, okay? Always. But you flip that around and you stop yourself. Doesn't matter how well you're seeing the market after you've made the money. You've made the money. Just walk away. You've done your job. Pat yourself on the back. Walk away. So that's what I'm trying to preach. And, every time people stick to those rules, stick to those numbers, they put some shackles on their daily loss limits and the number of trades that you're doing in relation to the risk reward that you get on average, that's going to transform your results, okay? Suddenly you're going to start seeing big jumps in the P&L and you're like, whoa, okay, I had 2 good days. What the fuck? What's happening? That's how we transform our results. So this whole channel is there to make you see that there is a better, easier way to make money in this industry, but obviously we need to put shackles on us until such time that we can do that naturally. And even now, I like putting shackles on myself. In fact, I find it more comfortable to have a daily loss limit that I know is going to take me out and just prevent me from trading. Or the lockout button. Like, that's the best thing since sliced bread, man. Like, the lockout button, transformative for the industry. Absolutely. Can I explain the thesis of... that's very, very nice. Tales, tales, I don't know how to read I don't know how to pronounce your name, but thank you. That's very kind of you. It says, no disrespect to the rest of the top step crew. Props for your humility. And if I had to choose somebody to trade my funds, it would be you. Thanks for the tips. I don't trade other people's money, so unless it's a prop firm. So that's the only way that I will trade somebody else's cash at this point. Joshua says, good morning, evening. Thank you for all that you offered to us. Can you explain the thesis of why I took a short at 80.63 it was? I took a short because if we look at the daily chart, actually let's start from the weekly chart because it gives an even better view. This is my view of, let me just see how you guys are seeing that. Okay, so this is the crude oil chart over here. You see this big supply here? This is the weekly supply. We have a reaction from there. These are my Q points. Daily Q high being rejected. We went below yesterday's low. So all of that, little signs that we have some sort of a correction in progress, right? So I didn't want to go against that, and I still don't want to go against that. I just need a better level to express my hypothesis, if that makes sense. But I just didn't really think that a full gap fill was on the cards. We might get it, but right now the only thing I'm seeing is longs as a misprice opportunity against the larger time frame, which on crude oil, you can't justify going long, but for the most part, whenever something happens, we have Middle East, some news, they've been selling it. So I'm just a little bit against longs with all of that going on. So I assumed that the fact that we didn't have a smash upside immediately and that we kind of stayed in range, and also that we exhausted the average daily range low to the downside already in pre-market, that can be a good sign that we're going to end up in a single direction to the same side. So just keep going into the trending day. Like anything, it's a matter of probability. I tried it on $170 risk, so, really small in the grand scheme of things. And it didn't happen. They tried to do a gap fill, but right now they are reversing from supply. Right now I don't have a good level to play this, so I'm going to sit it out. But that was the reason for the short. It wasn't anything like, I think it's going to go this way. It's just collating and aggregating all the data that I had on higher time frame and trying to match it up with intraday levels. And this time around, again, I didn't wait for the extension, did I? So there we go, D being naughty. What do I say? Wait for the initial balance extension. Did I wait? No. What did I get? Minus $170. That's what I got. So yeah. Oh, Henry Max, you make me laugh, man. If you're losing a lot of hours more than the ones you're making, you should consider doing McDonald's. They're hiring. They're always hiring, though, aren't they? Don't knock McDonald's, man. They I'm sure they have a lot of employees. They do a lot for the jobs creation. Komodo Dragon, a bit of dreamland there, I'm sorry to say. If I only take 2 trades, will I be able to buy a 200,000 house? Not if you keep blowing things up. And 200,000 USD, if you don't have consistency and if you keep blowing up, that's probably a 7-year goal, mate. Not next year. So I would adjust your expectations there. How accurate are you? Is another thing. Oh, Henry is already on the case there. Your hit rate, if your hit rate sucks massively, so if you're only getting like 20% or 30%, that's not good. That's not profitable. Then you need 3R. So you need to learn system design. A little bit of how you design the good system. What are the winning combinations of numbers that you need to hit in your performance to be profitable? And then you have to stick to that. And yet on a day-to-day basis, I've seen you now 3 times, you've blown up challenges. You've got to stop doing that. Size down, mate. Like, there's nothing else for me to say here. I think he was talking about 2R, Henry Max. So if you're taking one-to-ones or negative risk reward, you need a bloody high accuracy. Henry is absolutely correct. 70% on a one-to-one, yeah. If you have 2R multiples, and if you're just doing do or die, stop loss or 2R, you only need 35% accuracy. But even that's not being terribly profitable. It'll be better if you're sitting at around 40% accuracy with 2R multiples. But we're talking do or die. So you never get yourself out of a trade. And on some people, I actually do implement this. I call it the do or die. Stop loss or profit. 2R. Nothing in between. No over managing. Because a lot of us have a great idea of direction. But then we lenny out ourselves out of the trade, of mice and men. You basically choke a trade out so much that it dies and then you lose money on it. So it's something that is, at the moment, Komodo Dragon, a bit of a dreamland there to dream about a house that's like 200K next year. So why don't you first get some more achievable, measurable goals? How about stop trading with size and limit yourself to 2 trades per day? Start there, okay? Never mind a 200K house. See how you do with that, and then reevaluate in about 3 months, okay? This job can give you windfalls, that is true, but a lot of people have the problem with inconsistency. We see them on TopStep TV all the time. Makes 100, what was it? That guy that made 100 grand one day, and then went on a daily loss limit bonanza and lost 97K in the next 7 days. It's like, what are you doing, mate? And they keep saying that because it's a good story, it's great TV. But, somebody like me, I'm not terribly exciting. I'm just like chugging along at like 500, 800, 1,000, 200, 500. That's not exciting. I'm not very good for exciting trading. When I have higher sort of 6-figure accounts, I do size up. But even in those accounts, like you guys saw me trading 40, 60, 80 lots only when the account was like 2 million. That was the size of that account, right? Now I don't have that. I have like 200K. So it's like, obviously I can't trade 80 lots and 40 lots. I'm not nuts. So I've gone down, even in my personal account. The most I've done recently was like 5 to 10 lots. Like that's about it. And, I have other prop firm accounts, obviously. So that's kind of building up. And I'm, again, building up buffers everywhere. I'm not somebody who does payouts very often because I like a big fat buffer. But at the same time, I'm also somebody who's not afraid to take those base hits of 500, 200, 600, 500. It all adds up. Before you know it, you've actually made 10K for the month. Just doing those little trades on small size and stopping yourself from wanting more, from shooting for $1 grand, $2 grand, $3 grand, $5 grand. It's great. It will come, but you won't get there until you can trade smaller and you focus on the process. This is the whole topic of the London session on TopStep TV. Process over size, over crazy amounts of number of trades in a day. We want to showcase the side of somebody who doesn't trade a lot, who is able to sit on her ass for extended amounts of time waiting for the right levels to hit. And if people don't like it, you don't have to watch. But I think it's going to be very good, different sides, different perspective to how other people make money. And there's like 1,000 ways to make money. However, those of you who have been with me, you know what the method is all about, right? It kind of leaves no stone unturned. It gives you, I think the biggest thing with my method is that it gives you really good levels with unparalleled situational awareness. So even when you're fucking things up, excuse my language, you know that you're fucking it up because you're like, what did I do? I just held it past ADR. Like, why did I do that? And of course it's going to smack me back the other way because trending days only happen 8% of the time. So all of that is, it all kind of plays into situational awareness at the end of the day. But if you are already at the point where you know where you're going wrong and you can see it's like, oh my God, I went against that, that's already progress. So don't beat yourself up too much. Obviously, we need to rein in the size. Many people who come to me for one-to-one coaching as gold members, the first thing that I do, we cut the size down. And they actually end up making more money in a day on like 3 lots than they were making trying to do 1 mini, 2 mini, 5 minis, because at the end of the day, after all the carnage that they've done, they end up with like minus 3K or 200. But when you're trading 3-4 minis, you're looking for nice big extended moves, so you're getting 200 to 300 per trade. And you're like, okay, so at the end of the day, Jesus, I'm up 750. How the fuck did that happen? I'm trading micros. It happened because we remove emotions. You're not freaking out over size. You have a lot of space until you can screw things up on the day with a daily loss limit, and you give yourself space. So I'm going to leave you with that for this particular stream. I will see you guys at 1 p.m. CT for Market Stalking with D. Yes, it's a very big day for me today. And then obviously tomorrow for the London session again at 3:30 a.m. CT, or for those of you who are over on this side of the world, 9:30 a.m. London time. In the meantime, let's try to be less grasshopper and more market stalker. I'll see you on Tops of TV soon. Take care.